transaction, financial as well as non-financial. The way we see it going, it should be something that all countries, including India, should be looking at very, very seriously. And we're hoping to be a part of the big digital transformation that is taking place in this country. Thank you.
Hi everyone, my name is Chaitra Chidanand. I am the co-founder and president of Get Simple Technologies. The name of our product is Simple. It's India's first artificial intelligence powered payment product. To put it in the simplest of terms, you can think of us as an anti-wallet, anti-plastic product. And we have derived our inspiration from the real world, what we have seen around us in India, the pain points that me and my co-founder Nitya Sharma have personally gone through, both with accessing credit as well as making payments in India. So I'll just use one analogy and some personal stories to sort of deconstruct the complexity of credit and to emphasize how it can be actually made simple and accessible, democratized, efficient, and increase the spread, making it a win-win situation for everyone in the ecosystem. So when Nitya and I moved back from the United States, which was about 3 years ago, I wanted to shop online in India. I did not have a credit card. I went to the bank to try and get one, and the bank gave me a premium savings bank account because I was a returning NRI. But they said, sorry ma'am, you're a thin file customer, we cannot give you a credit card. So I went to the manager and I requested, sir, I don't need a large credit card. For me, it's for the convenience and the buyer protection and all the good things that come with a credit card. I don't intend to roll it over. Can I please have a 5,000 rupee credit card? The bank manager said, sorry ma'am, a 5,000 rupee credit card does not even exist. It's unviable. So from there started our journey, solving that problem, right? And then on the other hand, I started transacting. So I finally made a fixed deposit. I managed to get a credit card and I started transacting online. Here I faced the second set of problems. Every time I had to transact, I had to do a two-factor authentication. 3 out of 10 times my transaction used to fail, especially when I was on a smartphone. Out of those 3 times, once in every 10 transactions, money would leave my bank account, but not reach the merchant. And I would try to get in touch with the bank, did not get my money back, try to get into touch with the merchant, same problem, the merchant does not see that the money has left my bank account. So all in all, in about a 6-month period, I lost about 6,000 rupees. While all of this was happening, my life continued. I used to come to, I was in Bandra at that time. And so here is an analogy which inspired the product that we built. So I used to be able to walk into Manu's, which was the neighborhood Kirana store near where I lived. Now, I think since we are in Lower Parel, I thought I'll take the example of Worli. I'm sure all of you can relate to this. You have a neighborhood kirana store. You walk into that store. You've been buying from Manu's regularly, let's say for the last 6 months or a year. He knows you by face. One day you're at the store, you're trying to buy your bread and eggs, and you realize you've forgotten your wallet. And then Manu immediately says, sir, it's okay, you can pay later. Just like that, a credit line is born. Manu has also used data to be able to underwrite credit for you or to say, hey, pay later. He knows where you live. He knows what are the types of things you buy. And he probably is also looking at what you're wearing. And a accumulation of all of this, he decides that, okay, Chaitra is good for some 500 rupee credit, and I'm sure she'll be fine and repay me, right? So that's how I gain Manu's trust, right? And along with this trust come a lot of benefits. The next time Manu gets fresh mangoes, he calls me up. He's like, ma'am, I have a fresh batch of mangoes. I know you like them. Why don't you come and get them? Another time when I have a party at home and I cannot go to the store, I call up Manu and I request him, hey, can you please send some stuff home? I need this, this, and this. He's like, don't worry, ma'am. I'll send my boy over in 10 minutes, right? There are so many benefits. So the khata is just a convenience here. Now, I move from Mumbai to Bangalore. I go to Koramangala. Manu's is not there anymore. I have to start from scratch with Shamu's. What if there was a possibility for Manu to call up Shamu and tell him that, hey, Chaitra is, this is her reputation. This is how much she buys from me. This is how trustworthy she is. Shamu would be ready to roll out the red carpet for me from day one. How awesome would that be? Now, my buying is not limited to the Manus and the Shamus of the world. I buy at a lot more places, right? I buy online, I buy offline. Just imagine if Manus could call up Zomato and say, hey, Zomato, Chaitra is trustworthy and reliable. Why don't you, just let her transact with one click every time she wants to buy? How awesome would that be? That was the inspiration for Simple. Right? The question was, in today's day and age, when everybody has a smartphone, a supercomputer in their hands, there's so much data available online. Technology has made significant advancements. There is artificial intelligence, machine learning, you name it. Why can we not create a beautiful experience like this? Right? So that is what Simple does. We are a network which connects all the merchants. We are a piece of software that sits at the point of sale. And by virtue of sitting at the point of sale, we get a lot of rich contextual data. The kinds of data that we get: location data, Wi-Fi SSID, IP address, what operating system you are on, what are the types of items you buy, from which merchants do you shop, what frequency, etc., etc., etc. You get the point, right? Hundreds and thousands of data points about you, but hashed, which means that your privacy is protected. Using all of this data, Simple is able to create a reputation score for every user that transacts with the merchant. And over a period of time, just like Manu and Shamu were able to give their regular customers credit, Simple is able to underwrite thousands and thousands of customers. Now here's the beauty, right? The beauty of all of this is that without ruining the customer experience, without introducing friction, by applying technology smartly, Simple has been able to authenticate the transaction far more securely than a two-factor would have done, because we use multi-factor authentication. We are able to real-time see that, oh, Chaitra typically transacts from Bangalore. Now suddenly there's a transaction coming from Mumbai, and she's never purchased on Book My Show before. Now let's trigger a second factor authentication, as opposed to do it every time when she's transacting from the same Wi-Fi SSID, it's the same device, the same location, etc., etc. Right? So the whole inspiration for us was by applying the fundamentals of human-centric design and using technology smartly. Now, when you're getting these many data points, real time, you obviously cannot have human beings making these decisions. You need machines. And that's where machine learning comes in, and that's where artificial intelligence starts happening, right? So using these technologies, we are able to predict the credit score of a user real time. We are able to prevent fraud far more accurately than a piece of plastic with a chip embedded in it would have been able to do. So now, what does this mean? What does this translate into as a business opportunity? Now, let's say Simple exists and is powering multiple khatas online and offline. What if a bank was able to plug their balance sheet into this? And in return for plugging their balance sheet into this, they pay Manu on day one, as soon as the transaction happens, for a small discount. The bank makes about 2% of that transaction. Manu gets his cash flow. Bank gets visibility into the transactions that Manu is processing, and Zomato is processing, and Book My Show is processing. Online and offline these days are just notional. Using all of this rich and powerful data, the bank is able to do two things. Number one, instead of issuing a 50,000 rupee credit card, like my banker wanted to do, and finding out that a thin file customer cannot get that 50,000 rupee credit card, banks can start issuing 2,000 rupee credit cards. Why? Because the cost of issuing a credit card through this method at the point of sale, digitally distributed, is less than $1. So a 2,000 rupee card suddenly becomes viable. And now, because it's a 2,000 rupee card, you can issue it to 500 people instead of just 50 people. And by taking that small exposure, you learn about a user's behavior, and as they use, and based on their behavior, as they repay, whether they repay timely, they need more reminders, etc. It's rich, contextual, user-level data. You can use that to be able to decide whether next time this person comes to you for a 50,000 rupee credit card, or for a 1 lakh rupee or a 5 lakh rupee car loan or a housing loan, how do you want to treat them? How soon do you want to process their applications? Now that is on the consumer side, right? So I think somebody, Mr. Kapoor earlier on the stage here was talking about Alipay making 300 million contactless loan applications. This is how this can happen in India. And on the merchant side, the beauty of this model is this, right? The size of grocery retail alone in India by 2021 is slated to be an $860 billion market. All of us know how many of them are going to be small businesses, right? It's about 20 million Kirana stores that we are talking about by 2021. Now, even if we were to capture just 5% of that market through Simple, we are talking about a 40 billion plus money that flows through the system every year and growing at a very rapid pace. Using this rich amount of data, the bank is able to now offer working capital loans to this Kirana store guy who was otherwise required to fill multiple forms, despite the fact that out of the 8.5 lakh crore bad debt in India is owed by 12 accounts. The small Kirana store guy is the one who's denied capital whenever he needs it. And having a startup myself, I know the pains of cash flow, right? So Simple, through application of human-centric design, artificial intelligence, machine learning, and creating this network. Well, we started with a product. We created a network by connecting all the merchants. And now, if we are able to convince some of the banks to plug into this system, we would be able to create a platform that truly empowers the small and medium businesses and all individuals, the young millennials, people like me, across India. And suddenly, from 25 million credit cards that we have issued today, 300 million can happen in just a few years. That's the power of technology. Thank you.
Thank you so much. I think I'll invite Neha to start the rest of the technology session. This is not our next section, so there's no formal or informal break. This is a continuation of this session. I just wanted to highlight, and I'm sure you got the point, but the point was that the mobile is the device, but using the mobile, how much data footprint is getting generated and how it is being put to different use by different people. The whole idea is something that Ajay said in the previous session, that to enable small businesses to access new capital, because that's very important for them to access. You have to be able to allow greater competition on the supply side. Greater competition on supply side will happen when your capacity to issue, whether it's a card or whether it's a mobile-based payment product or a mobile-based credit product, increases from 5 million to 25 million a day, or whatever is the number that you take. So it cannot be a linear growth. It has to be completely disruptive. And I think that's what some of these companies are trying to do. Neha, please come. I'm waiting for you to come and take over. So, memento presentation is now? Okay. We can do that in the end for everybody together. I think we'll continue with the session. And when we finish this technology discussion and dialogue, then we can do the mementos. The important thing is that all of you are in the room and you are engaged, and we are talking something very important. And I'll just hand over to Neha to complete this session.
We begin the panel discussion, as mentioned, moderated by Madam Neha Punathar, Partner, Digital Strategy, Innovation and FinTech, KPMG India. I invite the panelists, Mr. Venkatesh Hariharan, Director, FinTech, iSpit Foundation, Mr. Tal Sharan, Managing Director, FinTech Financial Consulting and FinTech Master at FinTech Aviv, Israel, and Mr. Shashank Risheshringa, co-founder and managing director, Capital Float. A quick introduction of the panel. Neha is partner and head digital strategy, innovation and fintech, KPMG India. Total 19 years of consulting experience spanning multiple organizations, KPMG, PwC, IBM Consulting Services, Coopers and Librand and ANZ Grindlays Bank. Her specialization is in the areas of business operating model, business strategy and process blueprint, CRM change management, and organizing structuring. She has assisted multiple FS clients in implementing their strategies and hand-holding them to set up robust and scalable organizations for the future. She has developed a thought leadership paper on Indian banking, the engine for sustaining India's growth agenda, and social media for financial institutions. Mr. Venkatesh Hariharan is Director FinTech at iSpit and works with some of the largest banks in India to help them deploy India's talk. Mr. Tal Sharan, Managing Director, Equitech Financial Consulting and FinTech Master at FinTech Aviv, Israel, consultant specializing in analyzing corporates and financial institute requirements, bringing to the table vast financial and legal knowledge in order to bridge the gap between corporates and innovative FinTech solutions. Extensive knowledge in FinTech industry and has been providing advisory services to FinTech ventures in various stages. Mr. Shashank Risheshringa, co-founder and managing director, Capital Float, former strategy consultant and investor with global experience across developed and emerging markets. Prior to Capital Float, he was engagement manager at McKinsey & Company. Capital Float is a digital finance company serving small businesses in India and provides fast, flexible, and transparent working capital finance to small and medium enterprises and startups looking to grow their customer base, purchase inventory, or manage cash flows. With those words, I leave charge of the session to Neha.
Thank you. So I think me and my panelists have the unenviable task of capturing your attention before lunch. So we'll try and stick to the timelines and ensure that by 2 o'clock you get to your lunch table. I'll start first with Shashank, and I think I'm going to kind of connect to what we saw as presentations earlier, and the last one, especially the one which was made by Chaitra, where she talked about the immense opportunity which India has to offer, especially on the grocery side, and we talk about the mom and pop shops or the kirana stores. And Capital Float is doing a lot of work in that area. So maybe if you can share a bit about that in terms of how Capital Float is really playing a role in addressing the financing needs of, the micro and small enterprises.
Thanks, Neha.
Yes. 1:55. Vishwavir, you were just cutting our time. Okay.
So I'll be as brief as possible in the spirit of that. Just to quickly cover what we do at Capital Float. So we are a digital SME lending platform, and our focus is primarily on high growth ecosystems that have an SME at its core. So examples of these would be various B2B supply chains, e-commerce, retail distribution networks, payment and point of sale networks, transportation networks like Uber and Ola, etc. And here we work with a variety of different kinds of MSMEs as well as large partners like Amazon, Alibaba, etc. And the real focus for us is to build a differentiated SME credit delivery model using technology across 3 fronts. The first is product innovation. So being able to actually design bespoke cash flow based lending models for specific types of MSMEs and their specific needs. The second is in underwriting. And here, primarily using data to the fullest extent possible to both build superior intelligence to approve businesses that previously would have been deemed not creditworthy by a traditional institution, and also to lower the cost of underwriting. And finally, and I think possibly most importantly, is to actually build a virtual distribution model that can reach SMEs across the country, right down to the smallest towns, and do that in an OpEx efficient manner. Now, rather than spend time, I think, explaining how we use technology, I thought it would actually be helpful to show you an example of how we deliver microcredit to a segment that we just heard about, which is the Kirana store segment. So do we have the slides?
The video you want, right?
So just to start off with, sorry, if you could just go back one. So this is a mobile app that we developed in collaboration with iSpirit that was focused around a pretty challenging problem statement, which is how can you deliver microcredit in a presenceless, paperless, and cashless manner to the holy grail segment of SME lending, which is the mom and pop Kirana store down the street. This was an app built completely on the India stack, and I'll just quickly walk you through what the experience does feel like if you're a Kirana store. It starts with downloading the Capital Float mobile app. The next step, if we could, is to actually select a loan amount. Now these are nano loans, as starting from 20,000 rupees going all the way up to about 1 lakh. After that, and this is an interesting one, is taking the borrower's consent on being able to share the data that is either available virtually or on their phone. So in this case, sorry, if you could go back a second. So in this case, it would be their mobile recharge and SMS data, which is available on their phone, their banking transactions that come via SMS, and finally their transactions through one of our ecosystem partners, Echo, which is a digital remittance player. Having accepted these and given their consent to share this data, the next screen effectively asks for an OTP verification that performs the eKYC required for this to be a regulatorily compliant loan. After this, the borrower fills out basic Aadhaar details. The next step is the loan offer. So what's happened in the background over the last 30 seconds is a real-time underwriting algorithm that has taken into account the Aadhaar data, authenticating the borrower, their CIBIL record if they have one, their banking transaction data via SMS, their ecosystem transactions through a partner, in this case a wallet player, and other data that's available virtually on this particular entity, leading to a loan offer of 30,000 rupees. The borrower can then accept this, receive their loan agreement on their app. Next, please. Sign it via e-sign, which is part of the India stack via Aadhaar. Verify that via an OTP, so two-factor authentication on the loan agreement as well. Complete the authentication piece. And then finally actually see that the money has been remitted to their bank account, right? Now, what we just went through took about a minute here. If we go to the next slide, this is a real-life example of one of our early customers who actually went through this entire experience in 90 seconds. And today we're doing about 2,000 Kirana loans a month in addition to the rest of our business with this flow. Now, obviously, this has OpEx savings, which are tremendous. But I think one of the most fulfilling parts of this was to see the reaction of this particular Kirana owner and many others who previously have relied entirely on informal credit, suddenly not just entering the formal system, but entering with a bang, getting a loan on their phone in just under 90 seconds. So I'm sure we'll spend more time on this, but just felt like this would frame in some ways the discussion that we're about to have on the India stack, but also on other aspects in the ecosystem that's revolutionizing how lending can be done to MSMEs. Thank you.
Thanks, Shashank. And truly, I mean, the ability to basically reach the smallest, if I may say, consumer segment and, looking at the nano loans, as you said, I think it's very heartening to see the efforts which Capital Float is making in this space. And you also mentioned that you leverage a lot of the India Stack kind of platform to make it very seamless. And since we have Venkatesh here, Venkatesh wanted to kind of understand from you, how is India Stack platform? I mean, we saw one instance, which was Capital Float, but how do you see really the platform actually basically benefiting the end customers, which is the micro and small and medium enterprises today?
So I used to be a journalist, so I'm used to tight deadlines, so I'm going to keep it very crisp. The way we look at the next few years of the fintech sector in India is that there is going to be an explosion of data. So just to give an example, the way we have looked at the Indian market is in three segments. One is that segment which Shinjini spoke about, smartphones, etc. So the WhatsApp segment, which is, pretty much, one is that because of Aadhaar Pay, USSD, and UPI, in the next few years, there will be a ton of data that comes online. Apart from that, you have, the Bharat Bill Payment System, which will come online. Then there is the Goods and Service Tax Network. I think when you put all these things together, we are going to a new era of, data-driven or cash flow-based lending. We saw one example of that here. So I think the challenge for most of the banking sector would be, how do you kind of adapt to this new era of data-driven lending? And in terms of one of the questions that was asked was around partnerships. The challenge for the banks would be either you build those capabilities in-house or you look at, partnering with other organizations to build those capabilities. And I'm sure, Shashank and others are, talking to a range of organizations. So one of the things that we see happening is that, some of the data-driven lending companies are talking to banks and saying that if there are people who come to you asking for a loan of around, say, 20 lakhs, but they can't offer collateral, send them to us. We can partner with you to service those customers. So GSTN, UPI, BHIM, Aadhaar Pay, all these things put together, I think, is going to open up a floodgate of data. And then I think the big challenge for the banking and the financial sector is to integrate that data, run their algorithms, run better decisioning systems, and, offer loans. I think, so I'm not surprised that, in every fintech conference that I go to, one of the most sought after skill set is basically that of data scientist.
I mean, since you mentioned data scientists, I'm going to pose this question, Tal, for you, because you come from a country where I think every second person is kind of not a data scientist, but at least a lot of them who are experts in the tech space. And whenever we talk about fintech, Israel is right at top of the basically map. And we see a lot of banks in India looking at partnering with Israeli fintech companies. So as a fintech evangelist, and since the topic for this discussion today is more geared towards micro and small and medium enterprises, how have you seen in Israel? I mean, where have fintech companies really made a difference to that particular segment?
Okay, so first of all, thank you very much. You have a lovely country. This is my first time in India, and I promise to come back many times from now on. So Israel is a very interesting country. I have a presentation about this, but let's leave it maybe for later because I want to focus on what we just discussed here. You need to understand, we're a small country, but the ecosystem is vibrant. Fintech in Israel is exploding. We have two major banks in Israel. There's Poalim and Leumi. And among the competition between them and the startup ecosystem, we myself as an end user and other end users are enjoying frequent constantly new opportunities and new services, new financial services. It's staggering to see. Each month, one of the large banks is issuing a new product. So one is going with a digital wallet, and the other is doing digital free, and another operation to send money seamlessly. So, and on top of that, or aside to that, there are the startups who says, okay, the banks are really interested. They keep inventing new ideas. They keep implementing new ideas. So we as startups should go into that ecosystem, and this creates such a large I'll call it snowball effect. Okay, because the startups just keep coming, and we saw, take for example the number of investment in 2016. So we had $450 million invested in fintech, which is approximately 10% of the total invested in high tech. Now, if you compare it to India, where in 2016 invested in fintech around 530 million, it seems like more than Israel. But if you compare, we're a 9 million people population. You have banks with more customers than what we have as a population. so it's amazing to see that the number doesn't really matter. We're a global. We have a global perspective. When an Israeli entrepreneur wants to solve a problem, he doesn't solve an Israeli issue. He solves a global issue. We look at Asia. We look at the US, UK. It doesn't matter. It has to be a global problem, a global solution. And I've heard a lot of the discussions today, and I see a lot of potential for Israeli ventures to come and implement in India. And actually, the Indian-Israel relationship is wonderful. We in agriculture and in other areas, we're very good friends. So I don't see any other reason why in fintech we shouldn't do this and really connect all the rural areas and all the different locations you have in India. Such a massive country, but I really believe that technology can flatten both information flow and a lot of the processes you're doing currently, maybe to a particular vertical, particular area.
Yeah, and our Prime Minister is visiting Israel in 2 weeks' time. So
Yes,
I'm sure,
nice.
yes, and he's meeting a lot of startup companies as well. So whether it's Israeli startups or, looking at the Indian ones, and Shashank, this is for you, we see them, bridging a big gap that is currently there when we talk about the MSME sector and the kind of, challenges in terms of, capital access, whether it's, basically looking from debt side or equity side. Do you feel that when it is going to the market and kind of building the awareness about what Capital Float does or similar companies do you see a resistance, or what's been your experience in the market? Is there a lot of time to be invested in building awareness because they've been used to, dealing with the banks or reaching out the banks? So how do you kind of address this?
It's a great question, Neha. What at least we have found, right, is at the end of the day, there's a lot of talk of are fintechs eating banks' lunch? Can fintechs coexist with banks? And the reality is the customer really doesn't care, right? Whether they're getting a loan from a bank or an NBFC or a digital platform. What they care about is getting a product that fits their need and in an experience that is tenable for what they can bear, right? And I think that is the reality of SME lending in India today. The gap is extremely large. There are pockets that may be overserved, but by and large, it's a credit-starved segment of the economy. So SMEs will gravitate towards solutions that are convenient, easy, and affordable. And whoever can offer that, whether it's a bank or a new age lending company or the combination of a bank and a fintech, will create a ripple effect in the market that will automatically build a brand. I think our experience has been that the word SME itself is a misnomer, right? No one really wants to be called a small enterprise, let alone think of themselves as one. You're either serving a distributor or a manufacturer. Even if you're in the manufacturing space, you're serving a textile or garment manufacturer, right? And that person has a very unique credit need. They have a unique profile, and they have a unique set of preferences around the kind of experience they want to have. You have to be their lender of choice and eventually their financial partner of choice. And so effectively, building an SME lending brand starts from the bottom up, going as granular as possible and being as close to the customer as possible.
Thanks, Shashank. Venkatesh, a question for you is, we have India Stack building a lot of capabilities, which are probably, as you said, in terms of collecting data, more basically payments-led or basically, identity-led, whether you look at basically Aadhaar and some of those. A lot of the small and medium enterprise don't have basic, if I may say, accounting systems in place or the knowledge, we spoke a lot about GST today. Probably some of those things they don't have in place, and that data is very useful for the lending decisions that need to be taken. So as part of the India Stack, is there a thinking around how that technology can be provided for these enterprises, and is there a plan to create a utility around that?
So at iSpirit, one of the most important questions we grapple with is how do we reach out to the next 100 million that is not currently served by the banking sector. So if you look at, let's say, if I am a person who joins a BPO and I'm making 20,000 rupees a month, I would get a loan easily because I have a salary slip. But if I was your driver, and I'm also making 20,000 rupees. There's no chance that, the formal banking sector would look at me. So one way of kind of tracking people's transactions and cash flows is, using UPI and the mobile apps. So what we're looking to do now is do some pilots and partnerships where merchants start accepting payments using UPI. And then on the back of that, can we provide them with loans? If we see that their cash flows are X, can we provide them a loan of Y? So there are at least 4 or 5 states which have come forward and said that they are interested in partnering with us on that. So, and at a policy level, I think there is a significant amount of support and interest in looking at data-driven lending as the vehicle for reaching out to the SMEs. And I think Sharad, Nandan, and others are part of the cashless committee, which is chaired by Chandrababu Naidu. And I think this is a big part of the discussions happening within those committees. So I think from iSpirit's perspective, we are very keenly seeing how we can leverage UPI as a platform for data-driven lending. And especially in a case where, in a country like India, where most of the SMEs happen to be mom and pop shops, GST may not work in that kind of a case. So in fact, one more thing that's going to come up in the next version of the UPI app would be that I would have the ability to set a date range, download my data, get a digitally signed PDF document, which I can then share with a lender. And on the basis of that, I could access a loan.
Thanks. Tal, I don't know, from an Israel perspective, what is the contribution of the MSME sector to the overall economy? When we talk about India, we're talking about upwards of 30%, so it's a significant portion. And to that extent, when you spoke about the collaboration between Israel and India, are there solutions out there from an Israel perspective which you think can be leveraged in the Indian market, specifically targeted to the MSME sector, be it lending-led or payments-led? Do you see that easily transposable?
Okay. First of all, obviously, yes. I've been here yesterday meeting several banks already and introducing them to several actually showing them several solutions from Israel, and we see a great interest. What I want to give you is a quick crash course on what's going on in Israel in terms of fintech. Can you upload the presentation real quick? Okay, it's okay, it's a 3-minute course of why Israel is interesting. So click and so there's 6 boxes here. Do 6 clicks, I'll do it fast altogether. So as I said, we're a small population and we have global perspective. That's one thing that we've discussed. Another thing is that we're low on natural resources, and this provides us a very interesting idea that the government is issuing a lot of grant, a lot of initiatives to support startups going global, because we understand that what we can export the best is knowledge. It's never ending. We can always teach the next generations, and that's why you see a lot of startups. 2 more clicks, please. Now, another thing that is interesting is the mandatory draft. I myself was in the submarines and missile boat. Every man and woman has to do mandatory draft for 3 years, 3 years for men, 2 years for women. And this builds entrepreneurship skills like nothing else. In 3 years, you have to deal with life-threatening situation, decisions, making decisions that really affect your life and the life of those you command. You're learning how to to build structure, devotion, building targets and working towards them. So when we get out of the Army, we're very well built for starting a startup or a venture or even starting a business. Go ahead. Now, this is Tel Aviv Beach, which I really hope all of you will come to visit. Can you do 3 clicks? So this was why high-tech is interesting, but why fintech is interesting. So we talked about the amount of investment that we just had in last year, and we see also a very large rise in 2017. But the interesting thing to see is that we have over 500 fintech companies. This is an enormous number. Now, when I check the Indian market has like 72 very strong fintech companies. So comparing a 9 million population to 1.2 million population, we have a lot to offer. And we have, and we see it globally. A lot of global partners, a lot of corporate banks and global partners are coming to Israel, establishing R&D centers. We have CDE Bank, we have Barclays, because they understand that innovation from Israel works. And I myself working with 50 companies, we're mapped over 400, and we are taking them globally, and we see the potential, we see the implementation processes all over Europe and in US, and hopefully now in India. Can you click one more? Okay, this is just a thank you, but the thing is, we see a lot of potential in Israel entrepreneurship. There's OCR technologies that can be wonderful. The entire ADHAR initiative that is going on right now, it will open a new challenge. A lot of fraud, a lot of identity theft, which we see in the US, but here wasn't relevant, but I believe that it will something that we'll have to deal with. And we have a lot of companies like Authentics or Kazuar, or a lot of cyber fintech, cyber/fintech companies that really deal with these situations. So definitely, to your question, there are many and numerous companies that are relevant for Indian markets, and I hope you'll start seeing them soon in actually working here.
Thanks, Dal. I'm just mindful of the time, so we have probably 3 minutes more before lunch break. And Shashank, just a question for you is, you mentioned about creating ecosystems. You're working with, I think, Amazon and basically the larger e-commerce players. How has been, and I know a lot has been spoken about, the suppliers on that ecosystem who are actually basically, they have the ability to access credit on the back of the platform. What's been your experience in terms of the growth of these, MSMEs on that platform, on the back of the credit access that they have? I mean, have you seen really sharp growth in some of these enterprises because there's a ready e-commerce available, and then they have the financing, basically access. So do you see a big change in the way they have grown on?
The short answer is yes, but I'll just take a step back on this piece. What is happening today with SMEs in the country is that platforms like e-commerce, and I'll define e-commerce broadly as any digital transacting platform, whether it's taking an Uber car or buying a TV on Amazon or a Book My Show cinema voucher, is effectively opening up market access to SMEs in a way that never happened before, right? Earlier as an SME, you were either limited to your cluster, if you were a retailer to your catchment area, if you are a manufacturer to your supply chain. Now, you can effectively sell anywhere in India, right? Which is quite revolutionary. And the rails to make this happen have been done on the back of huge amounts of investment by the likes of Amazon, Paytm, etc. What the next step then is for these businesses to be able to have the raw material, right, in the form of capital, to actually be able to take advantage of this increased market access, and that's where they get stuck. Because most of these businesses need working capital. They have already pledged collateral for some other purpose. And they need a line of credit that effectively can scale dynamically with the business that is scaling equally dynamically on these platforms. And that is the kind of product or products that are not, at least have not traditionally been available in the market. So to give you an example, what we have seen is that a one rupee line to an e-commerce merchant typically results in about 10 rupees of additional sales on a marketplace, right? If I take the Uber, Ola example, self-drivers traditionally have much higher customer ratings than people who drive other people's cars, because owner drivers tend to accept more rides, tend to be more courteous, and tend to drive more, right? Similarly, if I think about POS machines, right? What demonetization did is it pushed, almost forced a whole cohort of retailers to start accepting digital transactions. But there wasn't any hook for them to continue doing so. What credit does, if you can tie credit, and this is something that iSpirit's working on, is if you can tie a credit product into the use of digital payments, you create a virtuous cycle where the more that shop transacts through a POS machine or through a wallet, the more credit they can access, the more they can scale up their business, and so on. Right? So what we found is that while we have an explosion in, I would say, e-commerce or digital commerce ecosystems in the country, without credit, most of these merchants end up getting stuck at some point.
Thanks so much, Shashank, and we will close the panel now. Thanks so much for your time, and have a great lunch. Thank you. Thanks.
Please stay back. Please stay back. Just a quick presentation of mementos. Could I request Mr. Gurumurthy, Co-Chairman, IMC Banking and Finance Committee, to please present memento to our session chairperson, Madam Neha Punatar. Venkatesh Hariharan. And Tal Sharon. Thank you so much. All right. We have Rohit Vahi. Please, could you please do the honors? Shashank Rishishringa. Shinjini Kumar, ma'am, can you please step up to receive your memento? Rohit. Yes, and now I request Shinjini to please present mementos to, Mr. Ariel Resnick. Ariel Resnick, are you here? I believe he's left. Never mind, Mr. Rajiv Agarwal. Mr. Rajiv Agarwal. And Chaitra Chidanand. All right then, thank you so much. We are breaking for lunch. Well, this is 2 o'clock. Please reassemble at 2:40 sharp. We have to begin the next session at 2:40. We have a lot of things happening even after that. So 40-minute break should be sufficient. Please cooperate. I know we are curtailing the break by a few minutes, but please cooperate and reassemble at 2:30 or even 2:40. All those who are outside, if you can hear me, 2:40 is the time for the next panel discussion. Thank you. All those who can hear me inside the conference area as well as outside, we are beginning in the next couple of moments. In fact, the session chairperson and the panelists are here already. Could I request one and all those in the foyer outside, requested to kindly proceed to the conference area. We are beginning. All those inside are requested to please take your seats. If at all you have switched on your cell phones during the break, you're requested to either switch them off or turn them to the silent or vibration mode, and you know the reason why. Last call to all those outside. If you can hear me, kindly proceed inside. We are beginning in the next 1 minute. Ringing of the bell outside in the lobby signifies that we are beginning the session. I think we have a good crowd, we can begin, yes? So very good afternoon, everybody, and welcome back post-lunch. At this point of time, I take the opportunity to mention and acknowledge our sponsors, the World Bank Group, First Rand Bank, Aditya Birla Finance Service, RBL Bank, Gaja Capital, the State Bank of India, New Growth Credit Private Limited, and SIDBI, Knowledge Partners, KPMG. The conference is supported by Israel. Well, this is session 3 on capital, bridging the SME financing gap, moderated by Dr. Ajay Shah, professor at the National Institute of Public Finance and Policy. Panelists are Mr. Gopal Jain, co-founder and managing partner, Gaja Capital, Mr. Rajiv Ahuja, Executive Director, RBL Bank, Mr. Rakesh Singh, CEO, Aditya Birla Finance Limited, and Mr. Sanjay Shom, Chief Operating Officer, Neo Growth Credit Private Limited. The moderator and panelists all are here, so let me quickly introduce all of them. We all know Dr. Ajay Shah, an economist for the past several years, having rich experience in macroeconomics and finance. Mr. Gopal Jain is here. He's the co-founder and managing partner of Gaja Capital. Serves as a venture partner at the View Group, LP, and India Internet Industries Limited. 22 years of professional investing experience in India across both private and public equity markets. Has been a pioneering VC investor in India. Made 18 equity investments. Mr. Rajiv Ahuja, Executive Director, RBL Bank. 28 years of experience in the financial services industry. Held key positions in investment banking and financial markets in India, Singapore, Hong Kong. Rakesh Singh, CEO, Aditya Birla Finance Limited. 21 years of experience across both large banking and non-banking financial institutions. A successful track record of leading large businesses and scaling up operations with high impact execution. And Mr. Sanjay Shom, COO, Neo Growth Credit Private Limited, a fintech company that does digital lending to consumer-facing small business enterprises by providing business loans that are repaid by card receivables, e-commerce sales, and other non-cash payments. With those words, I leave charge of this session to Dr. Shah. Over to you, sir.
I thank you all for being here for the post-lunch session. I hope we will make it interesting and match your optimism in us. When we think of SME financing, here are some broad facts that we have to grapple with. First is, everybody knows that the cost of capital for Reliance is probably 13% cost of equity and probably 8% cost of debt. And as you go to smaller and smaller firms, the cost of capital rises dramatically. And you can turn this upside down and say that's a business opportunity. If somebody will pay 25% cost of equity, 25% cost of debt, that's an opportunity. How can we make money getting capital to that person? So it's the first idea that as you go to smaller firms, the market prices skyrocket, and it ought to be possible to find business models through which we will deliver money to such organizations and reap a profit. Proposition 2, there's a standard idea in economics that there is a certain size threshold about sound accounting systems and trustworthiness of accounting data and some amount of governance capabilities. And this matters critically for whether you are able to bring in outside equity capital or not. See, suppose you don't trust my accounting system. If you give me debt, you are saying, look, I don't want to know what happens inside. You will repay me interest, you will repay me principal, I don't want to know what happens inside you. So a lender does not care about the borrower's true P&L and the borrower's true performance. In contrast, if you're an equity guy, equity is a residual claim. If you don't trust the accounting system, if you don't trust the governance arrangements, then you won't feel comfortable giving equity. So the idea is that there's a certain size threshold above which the firm has the organizational capability and the organizational complexity through which you can actually do equity financing. Below that size threshold, really, external capital is only debt. Nobody is going to give external equity capital. And proposition 3 is that the word SME means very different things depending on what kind of firm you want to look at, and the appropriate design of the business model of how will I do equity, how will I do debt. The how part changes quite dramatically depending on the size and complexity of the firm that we're dealing with. These are 3 broad ideas that I bring into this from an economics point of view. This session is a great design, and we have 4 wonderful people here who are living this in the trenches, who I would like to request will tell us war stories about what works, what doesn't work, what they have tried that has worked, what they have tried has failed, or other developments they have seen in the market about what works and what doesn't work. And we are time constrained because this session is already late. So this is going to be a bit of a rapid fire session. But what I would like to invite from all the four is, could you give us your insights that we all agree that there is this field, and we've been talking for decades about this field. What is your ground? What is your field experience in terms of the reality you have lived and the things you have seen, the things you've experienced, and maybe things you've seen from other people? What works? What doesn't work? So, Rakesh, could we perhaps start with you?